Looking at the markets with David Modell. Today we're going to look at a rhyme that can help you. It's a simple rhyme that can save you a lot of money. First, a couple of quotes. A rising tide lifts all boats. You might have heard that one before. It's from John F. Kennedy. Here's one you may not know. 90% of what passes for brilliance or incompetence in investing is the ebb and flow of investment style. And that's from Jeremy Grantham. Stocks tend to move together. When I think of a rising tide lifts all boats, I think of how the majority of commonly traded stocks, such as Apple, Amazon, General Motors, etc., go up when SPY, and that's the S&P 500 ETF, goes up a lot. I also think of how most of these stocks go down when SPY goes down a lot. Today, we'll focus on this tendency for stocks to go down whenever SPY goes down a lot. Now, stocks, as we said, tend to move together, and here's an example on this chart. We can see how, well, it's pretty clear right here when SPY, and that's the red line, when it went down a lot, all these other commonly traded stocks went right down with it. Amazon in green, Apple in yellow, General Motors in blue. When SPY went down, they all went down together. When SPY, the red line, went back up, all these other stocks went right back up with it. And when it went sideways, they all went sideways together. Now, there are exceptions, such as GLD, which is a gold ETF. There are exceptions which, like gold, often moves opposite to stocks. So again, SPY is the red line, and GLD, the gold ETF, is the blue line, and we can see how they move oftentimes opposite to each other. One goes down, the other goes up. One goes up, the other might go down or might just go sideways. When SPY is near the top of its usual range, like here, 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 that's when I don't buy SPY. When it's near the top of the range, I don't buy it. And I also don't buy Apple, Amazon, General Motors, or any other stock that tends to go down when SPY goes down a lot. So when SPY is up near the top of the range, I don't buy any of these stocks. Now, SPY is a weighted average of 500 stocks, but it also influences those stocks. When SPY goes down a lot, many people panic and sell their individual stocks. In other words, SPY is not just influenced by these 500 stocks, but it also, in turn, influences all those stocks. Now, I'm always watching SPY, and before I consider buying anything else, I check the SPY chart first. I know that if SPY goes down a lot, it will probably take a lot of stocks down with it. Therefore, I came up with a simple rhyme, and here it is. Don't buy when the SPY is high. Don't buy when the SPY is high. This rule might not apply as much to day traders if they're nimble enough to navigate SPY pullbacks, and that's a big if. But as a swing trader, however, with few exceptions, I don't buy any stocks or ETFs when SPY is near the top of its price range. A cautious swing trader, and I try to be a cautious swing trader, wouldn't buy any stocks or ETFs when SPY is in the middle of its price range either. Instead, a cautious swing trader will wait patiently until SPY is at the bottom of its price range. In other words, wait until SPY is oversold and then go bargain shopping for his or her favorite stocks. There's a lesson here for day traders and long-term investors too. Always check SPY as a gauge of overall market sentiment before buying any stock or ETF. After all, SPY impacts just about everything. When trading stocks or options, don't buy when the SPY is high is a rule that stands the test of time. It might just save you a lot of money and keep your bank account full and healthy. If you want more help with this or with trading or investing in general, feel free to contact me, David Modell. My email address is davidmodell@gmail.com. Thanks a lot, and I'll talk to you soon.